Hello everyone, my name is Marcello Kolax and you are watching the Clever Markets Technical Analysis Outlook for the week starting 29th of April 2024. And today we are looking at a few European energy markets. On a personal note, I am getting married in just under 10 weeks. My suit is being tailored, the rings are sorted out, the location is all set. And I'm flying over from Singapore to Germany in just a few weeks. Will be exciting. The only thing I need now is a wife, I guess. Okay, so one more thing also on the Clever Markets Technical Analysis Academy starting in May. We are closing intake 2.5 weeks early because we are already oversubscribed. So any one of you who was still planning on signing up, unfortunately we are fully booked, more than fully booked. But I can encourage you to still get on a seat for the October intake. That will be the last academy of the year. So send me a DM if you are so inclined to get your TA game up this year. Now, let's have a look at the TTF front month. And on the weekly chart, we see that 2 weeks ago, we did have 2 consecutive closes above the 23.6% FIB, right? So just zooming out, the market is swinging lower, swinging lower, swinging lower. Now we are at this trough here again near the 22 mark, and we are just retracing higher this down leg here. And above the 23.6% FIB, usually we would start seeing some stronger gains. And we did have 2 consecutive closes above it, but already 2 weeks ago, I said, this was a doji showing indecision, and also the stochastic is flattening out, and we are not really seeing much bullish momentum. So it is more likely that we will dip back below the 23.6% FIB at 30.29. And that is exactly what happened. So I feel that we could trace lower. How low, that is best evaluated on the daily chart, and then we could try another attempt at pushing higher. But for now, the question is, how low can we go? So we did have this bullish piercing line pattern in the middle of last week at an important support level, which is the 61.8% FIB of this down leg here, retracing the uptrend. I already removed that from the chart because the chart was getting way too busy. And after this bullish trigger, we only had like 1 day of gains on Thursday, and then on Friday, boom, bearish engulfing, just below the 38.2% FIB. What does that mean? It shows us that the bulls are potentially already running out of steam. And we have been seeing this for quite some time with the MACD essentially declining, which shows us that bullish momentum is exiting the market. And we also see that the 8 and 12 exponential moving averages aren't really following through. So we might be heading lower towards the channel support near 27 sometime soon. Alternatively, so this bearish setup would be undone if we push above the bearish engulfing, which also coincides with a 38.2% FIB, then we could make it all the way to the 61.8 or even the upper channel border. So what does that mean for the intraday chart for the morning of on Monday? So first things first, always good to zoom out. We can see that, yep, we did have this up leg and we now are having this down leg. But can you see, like, overall the big swings, we are probably still heading lower or maybe a little bit sideways. So we did broke last Friday this ascending trend line. Now we are heading lower, and this is a good one. 1, 2, 3. And now it's being tested for a 4th time. And we can see that we did get a bullish signal here, for the stochastic. And we can see that the momentum is pushing higher significantly. So I feel this should be an easy break above the trend line on Monday morning. But how high can we go? I am not so sure that we can make it far above this peak here, 29.81. And I feel we could push lower. So this could be like a false setup before the bears continue. Why do I think that the bears will continue? Well, simply because of the setup on the daily chart. So I feel that this bearish engulfing, although not yet confirmed by a stochastic, so we did have on a daily chart a bullish stochastic like on last Wednesday. So this here isn't really confirmed yet, but I feel we could get a false break, which would leave us a little bit in the middle here, but ultimately below 28.83, which is this level here, we would get the bear trend confirmed. And I feel that this is still more likely. So watch out for a false break higher and then lower. When would this whole idea of breaking higher and then continuing lower, when would the whole bearish setup be wrong? Well, if we push significantly above 29.81, and then we take this, and then we take this, and we just take it one peak at a time, probably on the daily chart then. So I really want to see some strength, some sustained strength above this level here, 29.81. Okay, cool. So in summary, we might now be retracing lower on the daily chart. We will get the bearish trigger below 28.83. We'll get the bullish continuation above 30.26. And we might have a chance of a bullish fake out this morning before continuing lower. So be careful. And that is all for the TTF front month. And on the EUAs, we see something very similar happening as on the TTF, but a little bit different. So here we see that on the weekly chart, the downtrend has accelerated once since earlier this last summer, and we are now below the trend line that has held once, twice, 3, 4, 5 times. And for now, this level is holding as suspected. We saw that with the stochastic actually topping out. And the one thing that I believe now is that we could continue lower a little bit. It is unclear how low, that is a question for the daily chart. But after a marginal decline, we could try again to push above this descending trend line. And for now, it's not looking too bad, considering that trend and momentum tools are bullish. So how low can we go? This is a question for the daily and intraday chart. So first of all, the intraday uptrend, the near-term uptrend on the daily chart, now I got it, is defined by the ascending trend channel. And we see that last week we did have a trough happening here with this hammer. So we are still making higher lows. That is good. But what is happening now? 2 days later, last Friday, we did get our first bearish Harami candle, which usually leads to losses. So that's why I'm marking these the high and the low of this bearish Harami candle, and I say, or pattern, and I say that we could decline lower if we move below 66.57, or the bearish setup would be undone with a move above 69.2. If we push lower, we could make it to the trend channel support, which is also this trough here from the 10th of April at 62.92. So, but for now, there's a little bit of sideways move expected. Especially, we might be on the intraday chart, we might be seeing a little bit of a bull trap where the market could initially push higher, which is somewhat marginally suggested by the MACD and also by the stochastic. Yeah, maybe we do get a break above the trend line, the new trend line. But we might be topping out at the 68.37, and there's a good chance that we'll push back lower. Can you see 6657 is also the validation level on the daily chart. So we could first get a false break higher, but the bullish momentum may not be sustained, especially not if we don't break above 68.37 with like great conviction. Then I would say, yeah, we could move lower again, or at least like sideways. For the upside, if we really get a strong close above 6837, then I need to see a move above 70, which is on the daily chart. Where's 70? There you go. It's somewhere here. It's this peak, right? Then we could make it higher. But once again, then we might already be there and we might be topping out anyway. So I say, if anything, a little bit of upside in the morning, bull trap, and then potentially continuing lower. All right, that is all for the EUAs.